So I'm doing a update on last week's trades, and also I'm going to give you some analysis of trades that I think there's a 10% movement coming in a FTSE 100 company, and I will show you the chart and show you why. Before I get into what I'm going to talk about, I do not put adverts on my YouTube channel. The reason why is because I'd rather promote my book. It took me a year to write. I wrote that just after doing my master's degree in risk. And I want to do this before I talk about the technical analysis. I want to do this part to tell you how my week went and also teach you a little bit on risk management. So my week did not go particularly well. I was predominantly short FTSE 100 companies. There was about 4 or 5 shorts I had. So I went long on 2, thinking, well, if the FTSE rallies, then okay, my shorts will be dragged up, but my longs will be dragged up with it. And what happened was I got stopped out quite quickly at the beginning of the week on my longs, and my shorts were dragged up. And as it turned out, 2 of my shorts, which were Melrose and ITV, I was stopped out at the highs of the move. So literally after I got stopped out, it went a little bit higher for an hour or two and then dropped and dropped and dropped for a couple of days. So it happens, but I'm pleased that it happened because it shows me my risk management is right for 2 reasons. One, I got stopped out of about 3 or 4 trades, and I have lost about 5% of my portfolio. Years ago, when I first started trading, if I got stopped out of 3 trades, it would have wiped my account out because I wasn't trading the right way. So it shows me my risk management is on point. All of my trades now are blue, so it means I'm in profit on all of my trades, and I've got I'm going to put 2 or 3 on. I'm struggling to find a long. Everything I look at is either inconclusive or it looks to me like it's going down. So I think the FTSE itself looks like it's going to go down. But so one thing that I didn't do right is I had it in my mind I don't really want to have a position on in the FTSE 100. I'd rather go long. If I'm predominantly short, then I want to go long some FTSE 100 companies rather than the FTSE 100 itself. I've not had a good experience trading indices. So I knew that I was exposed to something called basis risk, which means that basically I think I'm protected from, I think my shorts are protected from exposure to the FTSE going up because I think my long positions will offset that. But there's a basis risk between the performance of the FTSE 100 and the performance of my stocks that I'm long. So FTSE 100 might go up 3% and my stocks might only go up 2%. So that means that the longs are actually not offsetting the risk entirely. So I think what I've learned is that maybe what I should do is just in future, if I'm predominantly long, then short the FTSE. If I'm predominantly short on FTSE 100 companies, then go long the FTSE. But the risk management's there. The other thing is I got stopped out at the highs of moves. If I would have set my stop loss wider, I would still be in the positions and I would be in profit on both of those trades or thereabouts, about flat. But the problem is that if you have wide stop losses, when you do get the wrong side of the market and you have a wide stop, then that one trade is going to take a lot of capital off you, and that's something that I've done a lot in the past and it doesn't work. You're not going to grow your account like that. So I'm quite happy to be, well, not happy, but if I'm stopped out at the lows when I'm long and I get stopped out at the highs when I'm short, I don't think I put my stops too tight. But I know that what I'm doing is I'm giving the market a little bit of tolerance to go against me, to break above a resistance. But if it keeps going, then I'm out. So I'm quite comfortable because it means to me that I shouldn't be making massive losses. And that's what I think a lot of people will go wrong on. So I'm going to get to the analysis now. Subscribe, like, comment. The more interaction I get, the more videos I will do. Check out some of my other videos because I'm talking quite a lot about tactics and trading psychology. So check those out on the channel because they will really help you. To start this analysis, I'm just going to go back over some of the trades that we were watching. And this is ITV. I had done quite a few videos on this actually and said that I had a target of around 117, 118 pence per share. I was short based on the fact that this was a continuation pattern, I said at the time, and then when it broke down, got back up, I said maybe what we're doing is we're in this channel here, and it was difficult because I was short, but the FTSE done nothing but rally all week, and it just meant that the shorts that I had looked like they wanted to drop, but the FTSE was always in the green, so they just didn't. And I actually got stopped out on this day, and you can see that the market dropped, and I would be in quite a lot of profit as things are at the close of Friday. But this happens. I can't set stops too wide, because when trades go against me, I need to get out very quickly rather than let them take a load of capital out my account. So I've done the right thing by getting stopped out on this day per my analysis. But these things happen in trading. Some of the other things, I am still short Associated British Food, and I like the way this is looking. So if you've watched my videos before, I said that this is lower lows, lower highs, the overall trend. It failed at the 200-day moving average. If you look at the hourly, this looks like a big head and shoulders. So shoulder, head, shoulder. That's what it looks like on the hourly. And I think on the daily, you can see here, it's a clear channel. We've spent quite a lot of time around resistance, and it's broke down for 2 days. I don't think that this is going to find support now. I think the FTSE's turned to bearish. I think the US indices are looking more bearish now. And I think that what will happen is we'll end up testing the low of this channel before our next bounce. So this could sell off quite aggressively. And another stock that I'm short that I think could sell off quite aggressively is BAE Systems. So I said that we was going to get short. I was talking about shorting this around here, and I said when it closed here, I done a video. When it closed here, I done a video. And then obviously the next day it opened and gapped down. This, I think, is a bear flag continuation pattern. I think my target was around £4.30 per share on this. I think this is just a continuation pattern bear flag. It's closed below on Friday. The one thing I would say is I've noticed I've got quite a lot of stocks on my watch list, and I've noticed that we're getting a lot of really weird signals. And I want to show you what I mean. Just an example. I could pick out loads of these. Actually, I'll tell you what I'll do. This is one that I noticed. This is one that I actually said that it gave a bit of a buy signal. So we had this sort of, I drew this and I said potentially this could be a buy. Closed above this resistance line, back tested it, closed above, sold off. And I think that people would have seen that as a buy signal. And now obviously this is where stop losses would have been for short-term trading. Tesco is another one. So even though, so Tesco we was watching anyway, it was in this channel, broke above the 200-day moving average, closed above it quite a few times, and then big sell-off on Friday, obviously the FTSE. But what I'm trying to show you is that we're getting quite a lot of buy signals, and then a day or two later it looks bearish, and then we're getting sell signals, and then all of a sudden it rallies, and you're like, what is going on here? But I want to show you some new prospects for trading this week coming, and I'm just trying to remember. Ashtead Group was one of them. And it's a little bit dodgy because we are generally in an uptrend, but I don't like the way that this failed at the 200-day moving average. It put in a bit of a double top, big sell-off underneath this support line, big sell-off again. I wouldn't be surprised to see maybe a little bear flag form. Maybe you might get 2 flat days and then wallop, down we go again, or maybe it just sells off again. It's just that over the last sort of week, this has sold off a lot, so maybe you'll get a bit of a pullback. Maybe it might even want to back test this. I think it largely depends on the FTSE, but this could do anything. I just don't like jumping in on a short when the market's already sold off for 2 days. I'm not comfortable with it. I want to see a bit of a rally before I join this, because obviously we was waiting for a close below this support line. We've now got it, but I think overall, if you can get an intraday rally, or if it rallies Monday and you can sell back test of this or some sort of rally, I think that I'll be a bit more comfortable. But overall, I would say this market goes lower. Maybe this is a weird looking head and shoulders. I'm not convinced it is, but I just don't like the way it failed at this 200-day moving average, broke below this support, because this channel was was taking the market to the average. It tested it, failed. This now becomes bearish. The other stock that I noticed, I think, if I remember right, is Rolls-Royce. Yes, this is the one. So if we don't go too heavy on the analysis, let's just keep it nice and simple. You can see that we're sort of trending in this channel, this sort of sideways channel. Got above it, weird looking head and shoulders maybe. Market tried to get back above it again and broke down. I think the reason why I'm bearish this is because we broke support. You see how the market was above this support line, like this trend line here. Big sell-off, tested the average. I think this is a bear flag. And bear flags typically occur halfway through a down move. Now, if you look at the projection, it pretty much projects about £8 per share, which is about a 10% drop. That's quite a lot, especially when you're leveraged. The other thing that you can maybe consider is the fact that it hit the top of the channel, pulled back, hit the top, bottom, got above, bottom again, top. It could hit the bottom. I just see that we're underneath this 200-day moving average. We're within this channel where you could probably trade the range. You'd buy at £8, sell if it gets to the top of the channel. I think Rolls-Royce could head towards £8 per share. Of course, what could happen is we could drop a little bit more. Something could change on the chart and all of a sudden it becomes bullish. But as things stand, I say this is a bear flag, failed at the 200-day moving average. We're in this trading range. I think if you keep the analysis simple, it would say we're probably going to fall anywhere up to sort of 10% on Rolls-Royce. One of the other stocks I was short, again, I got stopped out, was Melrose. And you can clearly see that I thought that this was in some sort of symmetrical triangle. Market gapped up, stopped me out, and we're back inside the symmetrical triangle now. So if you was following, you should have got stopped out as well. Apologies for that, but as I say, we are getting some weird signals, and I think that now we're back in this, there's a good chance that within the next, maybe before the end of April, we end up sub 160 pence per share on this, and I'm probably going to leave that one alone, to be honest, because I don't trust it anymore. It shouldn't have done this. It should have just traded within the range. I don't like the fact that, I think maybe what this is a stop loss hunt. People were short because of the symmetrical triangle, and the market gapped up, took all the shorts out. Big players got short, and now we're just going to see this drop. So at the moment, I don't intend reopening my short, even though I want to. But if this is a stop run, then 100% the big money's now selling this. So really interesting chart. And just the final one is Sage Group, that hasn't really done much at all, and I'm not too convinced because I've moved this trend line. I'm not too convinced I want to be short anymore. It depends what the market does, but I think there's other prospects out there. And one final one that I've already discussed on a different video is CCC is their ticker, and I think that this is a head and shoulders. I think that we will come off, and I think that we'll test around 940 pence per share. Market went up quite quick, it can go down quite quick, and I think that a daily close below this trend line, I think is going to encourage lots of selling and liquidating of long positions. So far we're above it, so we don't really want to get short yet. Potentially we could head up to here again. I think it depends what happens on the FTSE or whatever, but I don't see a sell signal yet. But subscribe to my channel, and I will be posting possibly some midweek analysis, definitely some more analysis next weekend on FTSE 100 companies.